Chip stocks just sent investors a warning before the July 4th weekend, and most people are watching the wrong headline. What just happened to chip stocks? The job report looked like it should have helped the market, yet semiconductors got slammed heading into the 4th of July holiday. Was this profit taking? Was it sympathy selling? Is the AI trade flashing its first real warning sign right now? Or for what purpose are they rotating into different sectors? Did you know that? Today we're going to go ahead and cover the market pulse that you should be checking out on a regular basis, which is breaking down any economic news that comes out, such as the June job report. Interest rates, you're supposed to keep your eyes on that. Treasury yields, commodities, and sector rotation. Of course, the reason why you want to keep an eye out on all that is because today that knocked chip stocks much lower, and we're going to go ahead and also dive into why, of course, the sympathy news behind the semiconductor sell-off happened. And finally, we're going to go ahead and break down Palantir's explosive gap up move, whether this breakout has staying power or if investors should expect a cool down next coming up for Palantir. So stick around. But first, thanks everybody for joining. I'm Curtis. I'd like to wish you all a great and fantastic 4th of July holiday this weekend coming up. Have fun, be safe out there. On top of that, hey, happy birthday to America, great nation that we all live in. 250th birthday since the Declaration of Independence. I'm really excited going into this weekend, although we did have a little bit of a bump in the road with semiconductor stock just today and a couple days ago. So we'll go ahead and dive right into it. But before we do, if you haven't yet, hey, click that subscribe button for me, click the like button, drop in a comment question for me if you've got any. Let's get going. All right, so the first thing we're going to cover is this quick article right here. Chip stocks tumbled again by Heard on the Street, July 2nd, 4:34 Eastern Time. So what happened in today's market? Job growth cooled in June. American employers added 57,000 new jobs last month, the Department of Labor said Thursday. That was down from 129,000 in May and below economists' expectations for a gain of 115,000 jobs. My first initial reaction to this was, okay, it's going to be good for the Treasury yields, right? It's going to be good for rates, but we'll go ahead and move more into it. I'll share more on that in a bit. Rivian rallied. I did see them on the news earlier today and on my radar. They did pretty well, started consolidating throughout the rest of the day. Rivian did kind of catch my eye. Now, right here, Blue Owl saw a slightly improved redemptions. What they're talking about is private credit. Investors into Blue Owl Capital flagship private credit funds asked the firm to return $4.7 billion of their money in the second quarter, down from $5.4 billion. So you may want to keep your eye on that in case private credit redemptions end up climbing, as it will amplify and stress the stock market out, as well as any funds that are involved in private credit and investing that over into the stock market. Now, that's what we had on the Wall Street Journal, just to kind of give us a quick update. This one right here goes into the cooler June job reports by the Fed, and it talks a little bit more on the inflation and the rates. So right here, a cooler reading on payrolls in June, which broke a 3-month hot streak, is likely to keep Federal Reserve officials full attention on inflation and extend the interest rate pause while preserving the hawks' case for potential rate hikes later this year. Now, going back to my thought earlier, I mean, first off, I was thinking it was going to be good for growth stocks, as Treasury yields should probably end up coming down with these cooling off job reports. But what it truly means is that they're just not going to be raising rates anytime as of yet, and the sentiment on that's going to be a little bit different from what it was before. It doesn't necessarily mean that they're going to lower rates, and that's what it always comes down to for the growth stocks. They haven't made any news on trying to lower rates, so that's the reason why it didn't help out these growth stocks today. So right here it says markets are pricing in an 80% chance the Fed holds rates steady later this month, and a 46% chance they hike in September or October, down from 50% before. So that's for rates. And one big news that had came out, right, is that Meta, they're trying to diversify into a different area that they're not familiar with. So if you're not aware, right, for Meta, what they make their money off of is ad revenue, majority of it. So right here it says Meta pops 9% as company makes cloud push to sell excess AI compute power capacity. Meta shares popped on news that the company is building out a new cloud business. The company will sell its excess computing power to outside customers. CNBC confirmed that. The new business is a welcome signal for some investors who have been uneasy about the company's infrastructure building plan. Now, what that means is that, okay, so they've been spending a lot of capex on their infrastructure spending plan, right? But were they going to be using any of that infrastructure to be bringing in revenue? And apparently the way that investors were really looking at it is that Meta was really only going to be using that for their own internal capabilities to improve their ad revenue gains and stuff like that. So for that reason, they've been scrutinized quite a bit on their capex, even though ideally, I mean, they've been spending, quite a lot, just similar to the other hyperscalers, the Microsoft, the Alphabet, the Amazon, and on top of that, right, they've got strong revenue, they've got a strong balance sheet, just like the rest of the hyperscalers, but they've been scrutinized a lot more. Now, this article from The Street actually goes a little bit more in detail about it. I'm going to just share a couple quick lines with you all. Meta just picked a fight with Amazon's cash cow. Wall Street does not punish companies for spending money. It punishes them for spending money without a story. And that's exactly what I had just mentioned in the previous article. Essentially, right, I mean, they're spending a lot of money just like all the other hyperscalers. But what it really comes down to is that what's that money being spent on that's going to be bringing back revenue and more free cash flow for their business. Right here says, now that the company wants to change the story, Meta Platforms is building a cloud computing business designed to sell the very thing investors feared it was hoarding. Bloomberg reported July 1st. Now, this is the report that I had mentioned that was scaring off a lot of investors because they were thinking that, okay, now if Meta was going to be going into selling some of their excess capacity, I mean, they might have too much. And so that scared off a lot of investors, which pushed some of the stock owners from the semiconductors over into different sectors. Now, this is the main thing that I wanted to share with you all right here. Okay, I highlighted it. It says what struck me when I lined up the four hyperscalers capital budgets was not the size of Meta's number, it was the loneliness of it. Microsoft can point to Azure, Amazon can point to Amazon Web Services, also known as AWS, and Google can point to Google Cloud when investors ask what all that hardware earns. Until this week, Meta could only point to the ad business that already pays for everything else. That is why spending drew a downgrade from JP Morgan, while rivals that essentially were spending far more escaped it. So that's what I'm talking about right there. Meta is, again, right, strong revenue, strong balance sheet, but I think the big reason is that they've been scrutinized because all their revenues come from their ad revenues, and then on top of that, it's what are you going to be using this whole infrastructure that you're throwing all that money into on to actually bring money back. And so this right here, in my opinion, is not the fact that they're selling their excess capacity for AI is not the fact that they've got too much compute right now. They've got too much, so they've got to sell the excess. Okay, it's really they're trying to diversify into different revenue streams to be able to bring in more returns for their investors, etc., for their business. And then if you think about it, it's at the same time, it's similar to how Micron is going out there, right? I mean, they're known as a memory company, a commodity, a cyclical company, but they're expanding into more of the AI infrastructure in a different light. With other businesses such as their 16 service contract, Anthropic, and then of course with all the other AI infrastructure companies like NVDA. But anyways, we're talking about why the semiconductors sold off today, and it's one part of it. Okay, we've already covered the cooling job reports that we initially thought was going to bring down rates, which was going to push growth stocks to a higher valuation, which was going to raise their stock prices. That did not happen. And then, of course, the news about Meta. I mean, Meta is selling their excess AI capability, and the investors don't like that because they're thinking right now that they've got, okay, the AI build has gone too far already. We've got too much, so they're trying to sell the excess. And in my opinion, it's not that. So what I think you should do, right, if you think that it's that, you should actually go ahead and take a look into revenues first. Now, I pulled up on Yahoo Finance. If you just click on the company, you go to their financials, they've got it all right here, okay? And as you can tell, revenue is in the blue, it's been climbing. Net income, it's in the yellow, it's been climbing. Of course, after COVID, they dropped it a little bit right there. And then they've got more information down here. They also have the balance sheet, the cash flow, right? But at the end of the day, if you take a look at, we've got Meta here, okay? We've got Microsoft here. Same trend, upwards. We've got Alphabet, which is Google, same trend, going upwards. We've got Amazon, same trend, going upwards. Now, until this trend starts finding trouble, until they start sharing with us during their earnings call that they're not making any money, that AI is not looking too good, that's when the warning should actually be taken real seriously. Of course, everybody wants to know when that may happen, and we don't know. And especially right now with the growth of AI, the type of money that they're putting into it, everybody's projecting high. Even these hyperscalers, the reason why they're putting money into it is because they know that the returns are going to be massive. I mean, who's going to be putting in that type of investment if they don't think that it's going to be bringing back massive returns? Think about it, okay? Between the hyperscalers, about 700 billion this year, about a trillion next year. All right, now this is the last article on the whole Meta situation, right? This senior analyst thinks that Meta is chasing a $2 trillion AI compute opportunity, but of course it says that it's years behind. I'm going to read right here just real quickly. So Till thinks Meta capturing a share of $2 trillion AI compute backlog where capacity is sold out and prices are rising across all three incumbents. Amazon controls nearly 50% of cloud after decades of investment, and Meta must first win SMB customers before competing at scale. Till calls Meta cheap at a forward price earnings of 18 with a consensus price target of $827.57 buy or strong buys rating. So if you think about it, I mean, the hyperscalers have just been taking a huge hit because they've been spending so much money on this AI build out. Once those returns become visible, their stocks are going to be climbing up. That's my opinion, at least. And then the consensus price target, $827, right? I mean, Meta at right now, $582. They've got a long ways to reach that consensus price target. Meta's got a lot of growth that can happen. I mean, in fact, I think I had seen somewhere in 2030 they can double their revenues if this goes well for them. I'm not just talking about Meta, but I'm talking about the rest of the hyperscalers as well. So until it says in the number, until we could put our finger on the actual revenues and net income that it is that they're not making any more money, then I'm going to say, you know what? I mean, this AI build out is going to be able to do a lot of great things for them. There's a lot of smart people at these companies that the hyperscaler companies. There's an obvious reason why they're driving and leading technology into the next frontier. All right, and so going to the last part, which is covering Palantir, right? Today they were the stock of choice, in my opinion. They were crushing it from the beginning. They kind of started to just consolidate throughout the day, but they started moving upwards towards the end of the day a little bit as well. So let's go ahead and find out a little bit more about Palantir, okay? Palantir's stock bounces back as analysts cheers company's unique AI advantage. Now let's read what that's all about. We've got some key points right here. Palantir stock is up about 11% in July, with D.A. Davidson upgrading it to buy and setting a $175 price target. Analyst Gil Loria says Palantir offers a flexible AI model orchestration tool, securing data and avoiding single model reliance. We're going to talk about that in a little bit here. Palantir partnered with NVDA for U.S. government AI models. Its ontology tool ensures data security, etc. Palantir stock is charting a comeback from its worst month in over 5 months. If you haven't noticed already, right, Palantir, everybody think they're a hot stock, but they've been doing very poorly as far as the stock price, stock number goes. Last month, investors broadly dumped software stocks as they poured money into semiconductor plays, but they're giving Palantir and the rest of the software sector a fresh look, and it's been incredible this past week. In fact, the way that they've been fleeing over from the semiconductor stocks over to software such as Palantir, Palo Alto Network, and Snowflake. Even Microsoft has seen a good climb as of late as well. So right here says Palantir stands out from its peers. Anthropic's feud with the U.S. government has led enterprise customers to realize that the risk that comes with building a business directly on top of OpenAI or Anthropic's models, Palantir can cash in on that concern by offering an alternative for companies to build AI models on its orchestration tool, according to Loria. This points directly to the heart of one of my biggest concerns whenever we punch in a request into any of these AIs, okay, is the fact that they get all of our data. They get everything that we're thinking about, okay? And then if you think about a large corporation such as any of the Fortune 500 companies, you think about the public sector, our U.S. government, state government, etc., local governments. When they use AI, and these AI get to collect all of their data. Is that truly safe for us? I had watched this thing on CNBC with Alex Karp, the CEO of Palantir, and he shared the same point right here. He's saying that, enterprises are not happy with it. Enterprises they want to protect their business. If you think about how Amazon, the way that they had scaled and grown, okay, they started learning how the people that they allowed sell on through their Amazon channel, okay, they learned their business, they started doing it better than them, they started selling the same products they did, and then stopped letting those folks sell it, okay. Same thing, Amazon did that with Toys R Us. They got into Toys R Us's business by letting Toys R Us work with them, selling through them. Then they took Toys R Us out. Now, all I'm saying is that this is not going to be good if it negatively impacts the corporations who handle everything that we use from them, okay? I'm talking about streaming services on our television, right? I'm talking about our cellular phones. I'm talking about, the government that, deals with all of our stuff, right? All of our personal things, driver's license, social security, etc., whatever you guys work on. And then on top of that, right, these large corporations, the last thing they want is to give out their secrets. I'm not going to speculate on the intent of anything that's going on for the future, but at the end of the day, business 101, you can't allow competitors or even peers have the secrets that make your business successful. So pretty good article right here. We're going to go right into what happened with Palantir for today. Now, I've got this chart up on TradingView. This is the 1 year view, and I've got the candlestick view with some technical indicators, but let's go ahead and just kind of take a look to see what had happened, okay? So 1 year view, right? They started climbing up to about the 180-ish level, went to a high of about 205, and then started coming down, as you can tell. A lot of investors are trying to anticipate where they're going to be moving to, but how about this, okay? We've got the MACD down here, and as you can tell, this orange line, that's a signal line. This is the blue line right here, at least for the near future. The blue line has just surpassed the signal line a little bit. And if you can tell, there's a little green bar right here, and that shows that there's a bullish movement coming through. As you can tell, it's been climbing up right here, all green going up. If we zoom in closer to it. Actually, you know what? Before we do that, let's do the 5 year view, because I want to show you all where they came from, where they started. They were always roughly running at about the $15, $16 range, started climbing up in 2023 to 2024, and then of course with AI, with a lot of the potential on AI, they started skyrocketing, and then they started backing up from software because they thought that AI was going to be able to, and when I say they, I'm talking about all the institutional investors, all the analysts out there. They started backing away from software. Software started getting a bad rep because of the fact that they think that AI can potentially in the future do everything that software does. If you think about your software that you use to do, I don't know, maybe your timesheet at work, or maybe to run processes at work, they're thinking that AI can do all that on its own, especially if you think about with OpenClaw, NemoClaw, using those type of AI to just kind of run everything in the agentic mode. With that being said, let's look into the weekly view. I've got the 5-day right here. It's got bullish momentum. It's been climbing up. It went from about 110-ish up to close about 130-ish at this point. And then if we zoom into the 1-day view, okay, they gapped up right here from, what is that, 125 all the way up to roughly about 132, 33-ish, and started consolidating throughout the day. As I had mentioned at the beginning of this video, they started consolidating and then started climbing back up a little bit more towards the end of the day, closed at 100 and what is that, 130. So with that being said, we'll go ahead and do a real quick technical analysis. Since I've got the MACD and the RSI up, we'll go ahead and just back it up just a little bit, about a 3-month view. If you take a look at the stock, it's been kind of juggling to kind of hold, and it's trying to make its way back up now. If you take a look at the RSI 14, it's at 71-ish right now, and that means that it's getting a lot of buyers, right? It's they consider that overbought over 70, but at the same time it means that there's a lot of momentum, upward momentum. Just because it's overbought doesn't mean that it's going to be coming back down. That shows pretty good momentum there. And then on top of that, now if you take a look at Palantir's volume at the beginning of the day early on, they jumped up, they skyrocketed. So a lot of folks wanted to move in on them. That's what caused the gap up. Again, right, momentum's looking good with the RSI. And then as far as the MACD, that's the moving average, convergence, divergence. And right here, as you can tell with the blue line, which is the MACD line crossing over on top of the orange signal line, that shows that it's got a bullish sentiment right now. And of course, if you take a look at the histogram, these green bars, that's the bullish signal that it's going to be going up. Now, if we back up a little bit more, I'm going to just go into the 6-month mode. That way we can tell how they started dropping a lot. And this part on the right of the graph already kind of shows us a pretty good view. If you take a look at this skyrocket right here going from 130 up to 160, as you can tell, the blue line, the MACD line, has surpassed, overtaken that orange signal line. With the green right here, that means that the price is climbing up essentially. And then, of course, as we come back down, it's below, the blue line's below the orange line. The MACD line is below the signal line, and we've got the red here. That means that the bearish sentiment, sellers are coming through in a lot, and that's what creates that, which is this drop here. The MACD line essentially shows us that the path forward right now, okay, it's a bullish path. If you're interested in Palantir, good luck with that. Not, financial advice, but just trying to give you a gauge if you're interested in Palantir. At the end of the day, RSI shows us that they've got good, strong momentum right now, a little bit more on the overbought side. And then, of course, the MACD showing us that there's a bullish sentiment with going upwards and, of course, an upward trend looking into the future for Palantir. Now, if you get into Palantir, best of luck. I think Palantir is a fantastic company. I think Alex Karp is transparent. He might be seen as going a little bit overboard during his interviews and stuff like that, but I feel that, he gives us good transparency. And the bottom line is that I like what Palantir can do for AI and the future of technology, the future of protecting all the data. I think the enterprises, the corporate companies out there, the public sector, they're all going to want to have that Palantir layer on top of their AI. So with that being said, hey, thank you so much for watching. Again, I'm Curtis. Thanks for joining. Thanks for watching. I'll see you guys again the next time around. If you've got any questions, drop it into the comment. Click that like button for me. Click that subscribe for me. I'll see you next time. Make it a great day. Happy 4th of July.